Good morning. This is Bert Dohmen's chart guru with the chart of the S&P 500 on June 14th, Friday. Here we can see the chart of the S&P 500. Here's the November 16th low, and it has a beautiful regression channel. This is a special regression that we use. And as you can see, the index has maintained that regression channel very nicely. Here we can see the correction. This is May 22nd. This is when Ben Bernanke testified before Congress, and his remarks, in our view, were misinterpreted. Everybody thought now the Fed is going to withdraw the stimulus, which we don't think is going to happen under the current global economic conditions. But nevertheless, we had the correction. This is something that the Fed wanted to achieve. Enthusiasm had gotten too high, and so we needed a correction in the market. What's interesting here is that the S&P 500 got down to the lower part of the channel. That is support. It bounced up and then had another downturn, and once again hit the lower part of the channel, but at a higher level. This could be considered a retest of the low, and so far it has been successful. We also see here that the first decline went right down to the 61.8% Fibonacci retracement of this rise right here, which started in April, mid-April. So 61.8% retracement, it's a Fibonacci number, and it's a very important number in a bull market. It's a normal retracement of a decline before the market starts up again. We also see here that the retest of the low actually stopped at the 50% Fibonacci retracement level. So these are pretty good support levels, and really suggest that the market does want to go up from here. But of course, it's impossible for human beings to predict the future, so we just have to go by the weight of the evidence. And the evidence so far is bullish. We also see here the special forward-weighted moving averages staying nicely apart. They on a buy signal. They have not crossed over, although right here now, there is a danger that they may cross over at least for a few days, but that is allowable, and we will stay with it until the evidence was to the contrary. Now, if this low here, the recent low for 2 days ago, is taken out, then it would also take out the lower part of the trend channel, and then we have to start getting careful. If the S&P goes below 1600, then of course we would interpret that bearishly. That's all for today. This is Bert Dohmen with Bert Dohmen's Chart Guru signing off.